No mai, haere mai. Welcome to 3 News. The Reserve Bank has hit the pause button, keeping the official cash rate at 3.25%. It ends a run of 6 consecutive cuts to the benchmark lending rate, with the central bank today citing concerns about global uncertainty and rising inflation. As political correspondent Zane Small reports, the cost of living continues to bite despite lower interest rates, and the government is under pressure to deliver relief.
1, 2, 3, 4, we won't take it anymore. 5, 6, 7, 8, farm negotiate.
Union members of the government's drug-buying agency Pharmac protesting today in Wellington over a 0.2% pay offer.
The pay offer is totally unacceptable. The hard work that they do, it's just, insulting what they have put up. And the clawbacks to their step system, which, leaves them worse off, in years to come.
The union says Pharmac is underfunded by the government and workers are paying the price. The cost of living continuing to bite as inflation ticks up again.
Their pay rates have not kept up with the cost of living, and that's what we're here to. That's what we've been trying to negotiate, a decent cost of living increase.
New Zealand has been in a significant deficit. We've taken on a huge amount of debt, and like many employers, we're now in a situation where we need to be careful about the pay increases that we offer.
The rising cost of living, part of the Reserve Bank's decision today to keep the official cash rate at 3.25%, following 6 consecutive cuts that led to lower mortgage interest rates.
I think we're getting towards the bottom of the interest rate cycle. So for people who have been banking on very large further reductions in interest rates, I think there's a risk that they could be disappointed.
The Reserve Bank today cited concerns about rising price inflation and uncertainty in the global outlook. But there is still significant spare capacity in the New Zealand economy. So subject to inflation pressures easing, the central bank is projecting another cut to the benchmark lending rate in August. Westpac research shows that average household incomes after tax have stagnated, with softness in the job market. And while income growth has stalled, inflation is picking up again. Food prices, for example, increased 4.4% in the 12 months to May.
The government does absolutely not addressing the cost of living crisis.
Are you confident that you've done enough to meet your promise of reducing pressure on the cost of living?
I remain concerned about the cost of living. It's a driving objective for this government to address it, and we know that will continue to take time.
Right now we are still seeing a lot of pressure on a lot of households' balance sheet. Income growth has been very sluggish for about a year now, but I think we are starting to see signs that things are picking up, especially in parts of the country that are closely linked to our rural sector, especially the dairying sector.
And I am seeing signs of growth across our economy, which is good news for households, businesses, communities who need that relief and need the positive effects that growth brings in terms of income relief and cost of living relief.
Just what these protesters are waiting for.
Well, OK, Zane, how is the government planning to ease the cost of living?
Well, on food prices, the Finance Minister said she'll soon be meeting with the Chief Executive of Fonterra to get an understanding of why the price of dairy products like butter, for example, are so high. Dairy prices are largely driven by export demand, and right now there is a lot of demand for New Zealand dairy products overseas, so prices have gone up. But Nicola Willis says she wants to get an understanding of whether there are other reasons behind it, such as lack of supermarket competition. She said she also wants to find out why dairy prices in New Zealand are often more expensive than in other parts of the world. It's also worth noting that despite lots of interest rate cuts, not all mortgage holders have yet refixed onto lower rates. I'm told that close to half of all fixed mortgages are up for refixing in the next 6 months. So the Finance Minister says that should bring some cost of living relief.
OK, Zane, thanks so much. Brad Olsen, senior economist at Infometrics, was with us a short time ago saying a pause in the OCR was expected. But while there's a lot of talk about uncertainty, it is not all doom and gloom.
Look, it's a smart decision to press pause at this stage. We know that there's a lot of uncertainty out there in the economy. The Reserve Bank's Monetary Policy Committee clearly looking and worrying a little bit about some of the inflationary pressures that are coming through in the numbers. Also, though, curious about just how quickly or not New Zealand's economic recovery might continue to go through. Until they've got a bit more of that confidence, they are just wanting to hit pause for a moment, watch a bit more data come in before they make their next big decision. They've now got about 6 weeks before they have to make that next call. So time to watch everything come in, make a new assessment, and then figure out the pathway and journey for the rest of the year.
Yeah, look, after 6 consecutive OCR drops since August, I mean, many Kiwis will be thinking, why hit pause now when so many are still struggling financially?
Certainly, and the biggest challenge for the Reserve Bank is that they can see that too in the numbers. They noted some of the weakness in recent economic indicators, but they're also challenged by the fact that there is a bit more inflation, a bit more pricing pressure in the system than they'd be comfortable with. And they're hoping that it is temporary, but they're also worried about the potential persistence. You look at the likes of food price inflation having accelerated in recent times. You look at some of the challenges around energy costs, electricity and gas going higher. They are cautious about that. But importantly as well, they're also quite confident that there is still relief that hasn't fully hit the economy yet. The 225 basis points of cuts to the official cash rate already, taking it down to 3.25%. Not everyone has refixed their mortgages yet onto those lower rates, so Kiwis still expecting a bit more relief even still as we move through the rest of this year.
Brad, how would you gauge the mood of Kiwis and businesses at the moment? Would you say that we're still weathering a cost of living crisis?
It's still incredibly tough out there. You hear of businesses every day that are feeling the pinch. We know that households are also feeling those challenges. Job opportunities are not plentiful by any stretch of the imagination. People are still having to pay those higher and higher prices. A lot of people are still struggling. And I think we see that very clearly in the economic numbers. The challenges that we're still seeing a lot of that uncertainty out across the economy. We don't want to get things wrong. We did that last time. We got too much inflation. We've had to now have this very, very bitter medicine in the economy. And so there's a delicate balancing act coming forward. But we certainly see that in the numbers. Yes, there's a bit of expectation and optimism that things continue to improve, but it is a slow, hard slog as we move through the rest of 2025. We're not getting the economic motor running particularly quickly.
Yeah, I mean, is there reason for optimism? Because it seems like there's a lot of doom and gloom out there.
That's true. And although, again, we expect a lot of households are still going to refix onto those lower mortgage rates as we move through the rest of the year, the primary sector in New Zealand also doing well at the minute. You're seeing better payouts across our major export commodities, but also the Reserve Bank signalling quite clearly today that they're pausing at the moment to stop and assess, but that if things continue to go down the pathway they look likely to, if inflationary pressures pull back a bit, if you continue to see the economy sluggishly moving forward, but still seeing a lot of people in a tough, challenging position, the Reserve Bank does expect to cut interest rates further. They very clearly signalled that today. It was a very direct statement. They basically said, look, if things continue to evolve as we expect, yep, we'll cut a bit more. So there is an expectation now, a very firm easing bias that interest rates are likely to further drop this year. I still don't think households should hold out for lots of further interest rate cuts, but a bit more just to try and make the economy G up a bit more activity as we head through the second half of 2025.